Hey guys, decided to make a small trade recap and going straight to the point about continuations. So I found a good example while doing my weekly review, and yeah, it's about continuations. So I think it's interesting to talk about it. So doing my item frame analysis, uh, like you already know, on the 4 hour for me, I like to focus on big swings in price. So if you use a pip rule, I think this should be your high and this should be your low. But I just focus on the big swings. So for me, this is my item frame, my 4 hour swing high and my 4 hour swing low. So at this stage, when I talk in the last trade recap that we never reach EQ, so this pullback down can easily evolve and fail and actually reach the EQ, can actually reach premium prices. Something that I also very aware that when price reach the unrefined item frame range, which is for example this big one, and when price actually taps this range that I mark with this bold line, it can be an indication that the pullback, the move up, already the mission of the pullback is already completed. So in one hand, I have the indication that maybe the pullback is completed, and now that it's completed, we are going to move to the downside. In the other hand, on the daily, we never reach a good premium pricing. So for me, and especially with this strong internal low, because this internal low took out this internal high, so for me it's internal strong low. We also have the possibility that this move down was used just to mitigate something at the 4 hour discount of this internal leg and then pop to the upside. So we have two options. When we have two options and I'm not totally sure, it's not a problem. Like you can hedge, you can take buys when you are in a good area of value, and you can take sells when you are in a good area of value for sells. We don't need to know exactly what will happen. We just need to react. So don't predict, react. And yeah, when I'm not sure, I just hedge. So going into the London session, I think it was 21 March. Going into the London session, knowing that price already tapped in this unrefined item frame range, and M15 boss bearish and 4 hour chop bearish, I was not sure if this move down again was used just to mitigate something and the discount of this 4 hour leg, or if it actually the pullback was done and we're actually going to take out the low. So I will use M15 to give me more information on M15. If I go down to M15, I look left. So when we didn't reach this 4 hour POI, that was a fractional refinement, but we reached M15, and this was a flip zone, by the way. We have a flip here. So this supply took out this small range, this internal boss. So yeah, for me it's a valid flip. On M15 we have the swing high here and the swing low here. So M15 boss bearish, right? And you have a change of character to the upside. I personally don't need to always be trading with the pro M15 trend. If you are in the beginning, I highly recommend it, as I know it's on the beginning trading plan. But we also need to understand that before the break of structure on M15, what we will have? We have a change of character on M15. So the M15 choke is the first indication that can lead to M15 boss when the objective and the mission is completed. So that's what I thought. Okay, we reach a discount and we have a change of character. Maybe this is the time to move to the upside. I don't know, but it can be. So after coming to my desk in the London session, and I see like all of this buy side liquidity here, tons of liquidity, and on the sell, I didn't have any type of liquidity, to be honest. So I'm much more inclined first in terms of liquidity to look for longs, especially knowing that we also never had, if you look down, a change of character to the downside. So for me, this was an internal strong low. Let me just put here, because this took out, this creates a new high, and this was weak. Okay, so knowing that this can be the move that can reach higher prices, or even just a move to the upside and take out this high, I'm interested in that for the short-term trade. We have a lot of buy-side liquidity at this stage, and when we have a very clean sweep of liquidity here, I will just put here a nice sweep, mitigate deeper into the zone, and then form a change of character. We also have a M15 change of character. That was a good indication that we actually very likely going to the upside and take out this high, even though in the end it did not happen, but we capitalized anyway, so that's not a big deal. After this change of character, I was looking to take longs here, and I think Matt took this trade, and it was a very nice trade. You can see on the daily recap, it was, okay, I think it was a very nice trade here. Okay, mini lesson here as well is, you have a few POIs, right? You are not sure. So let me put here a few POIs for people who are not sure. So first and foremost, if you are not sure, there is nothing wrong by waiting for M1 confirmation entry. Sometimes we're not sure that M1 confirmation entry will probably save you a lot of the time. So, however, price, if you look a little bit closely, for example, this already broke above here. So for me, this is not a flip. So straight away, I'm not interested in this one, unless you have M1 confirmation entry, of course. And you have these two possible POIs, the flip, right, or the extreme. But the extreme here is not mitigated. So at this point, you have unmitigated extreme and you have a decisional. When I have an unmitigated extreme, I just take a confirmation entry from the decisional, and I'm set a limit on the extreme. I miss this trade because I'm transparent with you guys. I use the second time frame, and it's not a secret sauce. Sometimes you miss trade by using seconds. Sometimes you get involved by using seconds. Like, is something that you need to see if it works for you. But by using seconds, I missed this one, even though I monitored the entire price action, and I was aware that there was involved there. Okay, we have this nice trade. You can take a long. I think Mike took this trade, and you can target. You can take multiple targets. But I was expecting at the time that this high would probably get run, because not only it failed to make anything, we not even have a change of character bearish, but we also had tons of liquidity. So so after the change of character, then this massive move to the upside, I was okay. I missed this one, but let's just keep tracking price and see if there is any continuation, because even a continuation from here to here, I can have my 10-hour trade. So let's see. Okay, go to M15. I just want to also explain that the more you, for example, when we have something like, let me put a draw here, when we have this, imagine you have the boss, right, and again price moves to the upside, moves to the south, and then you have a change of character, right, and usually you have something like this, for example. So every range that is unmitigated and was left behind, for example, this is mitigated, this was very low in the leg, but for example, this is unmitigated and this is unmitigated, for example, because let's just put something like this, just to explain you guys something. So when the objective, we take out the low, is already completed and we are pulling back, usually the ranges where, or the supply and demand zones that tends to give the pullback, so that tends to finish the pullback or give a strong reaction, usually are the unmitigated ranges left behind. So when I'm taking, for example, a continuation here, if I have, for example, an unmitigated range left behind, I'm much more concerned about taking a continuation here, and I'm probably more cautious. So, for instance, if this already mitigate the zone, and this zone is already mitigated, for example, like this, if I have a continuation here, I'm much more happy to take it, because when I look left, I'm not taking a trade into an opposite media time frame or a time frame unmitigated zone. So just to make it clear, with continuations, it's important to know where we are. So at this stage, I'm expecting this high to get run, but I also know that where can I see unfavorable price action, and I can see unfavorable price action, especially at the extreme that I know, and I have this zone that we have a lot of this zone, we have a lot of equals below. So a zone when we have large liquidity above or below covering the zone, we tend to have large reactions. So I'm personally not interested in taking a continuation straight away, straight into this supply, just because I know it's likely to have a strong reaction. So I don't want to get involved in this. So on M1, if I put the zone correctly, something like this. Okay, I missed the trade, no problem. Let's keep moving price. You have, this was also another trade, but I missed because nothing on the second. And I want to show you guys that on the second, you're also going to miss trades. So it's not only winning trades, and it's not only that. I believe on this time frame, we can assume that this range react to anything specific, because if you look here, we never tap into the supply. But on FXCM, I personally use FXCM, we actually did tap, because FXCM give you a little bit of bigger wicks. So for me on the FXCM, because did tap, it becomes a valid flip to get involved in a continuation, and that was a nice trade if you get stuck in. I missed that one again, no problem. So after missing the trade, I'm expecting the high to get run, and I personally want to get involved in continuations. So and I didn't explain, but my entry model with continuations is basically you have something like this price for buys. I want to see a range formed through sweep of liquidity, and need to react to something on the left. And when I see the failed reaction, I use weak breaks. If you want to be more conservative, use body breaks. If you want to be really conservative, sometimes you can wait for the entire supply to get taken out. I personally am happy to use the most aggressive way, that is just weak breaks, even though the entire supply is not taken out. And then I just enter on the extreme. I will not enter on decisional, even though it's formed through sweep of liquidity. I just focus on the extremes. If it goes earlier, I take one confirmation entry, it is what it is. And I also use mitigations to know, because sometimes the extreme is mitigated. So yeah, then it makes sense to enter on the decisional. But majority of the times I take the decisional. I take the extreme, sorry. So at this point in time, I didn't see any type of entry. So we have what I said to you. For example, I can justify this reacting to this range. I have the failed reaction, low time frame, failed reaction, and I have the extreme. Okay. I personally, like I said, I don't want to get involved straight away into this POI. let me just put something like this into perspective. I was more interested when I see this on M15, wait for a pullback to mitigate something on M15, because when we have an M15, for example, internal breakout structure, we have an M15 pullback. So if I take M1 continuations, because M15 objective is to pull back, these M1 continuations will be used as internal range liquidity. So yeah, I just was interested in taking the buy from down here. Let me just put here on the left, and you can, I'm not sure if 2 pips here work. Yeah, you probably missed a trade here, but there was a continuation. So at this point we have a change of character, right? So after the change of character, what I need a flip. And when I saw price moving down here, I was just waiting for the price to move up again and validate this entire supply, this entire demand, sorry, as a flip. So when price did this, at this stage, if you want to go just to confirm on 15 seconds, for example, it's just reading lower time frames or night time frames, basically. So it makes sense, right? If you go to them one, you can see it. I just went to the seconds just to make clear, but yeah, I use it. So after the move up, move down, move up, move down. At this stage, you can just enter that market. You can just refine the zone, something like this. So that was the trade I took, because I missed this one. There wasn't any trade here, so I keep following price. And if you notice, I missed this trade, right? You can take this one. I missed this trade, and I missed this trade. However, I still keep monitoring price, and I still keep focus, and end up with a trade that met my plan. So, and for me, it's probability. For the failed reaction, again, a lot of you wait for body close. It's completely entirely to you. So make sure to collect data and see by yourself which one you prefer. But because you already know I'm more aggressive, so for me this works fine. And you can get involved. You can just refine it to the week if you want. You can use the entire candle. Like, it's up to you. For me, this is a valid flip. I can put something like here just for you to understand the failed reaction. So you get involved, and you can touch it. That's why sometimes 10R is better, sometimes it doesn't. But for example, if I was not touching 10R, I probably would be touching this week high, and price never took out the high. But I just touched 10R because it keeps your equity curve nice, in my opinion, and with a smooth growth, and just getting paid, and your confidence everything starts to add up. Your confidence becomes bigger. You are more happy to keep following your plan because you are seeing results, all that stuff. So for me, it works fine. A mix between fixed and expression with target. I use the fixed 10R to remove 75% of the position. So, and yeah, that was a trade. At this stage, I personally took a break even because that was much more aggressive. But for example, because I was expecting this high to get run, even though I know that at extremes we tend to see a pullback. So I know that yes, we probably see a pullback, something like here, to keep moving up. So I expect this high to get run. So again, I went to M15, like I did on this move. After this internal boss, I expect a pullback on M15. So after this internal boss, I expect a pullback on M15. Keep trying M1 continuations here. Will be used probably as internal range liquidity because the objective on M15 is not to pull back. So you can just, for example, it's very clean this week. Go to M1 and you can refine. I was just looking for a buy at this stage, but it didn't work out. You have is extreme. Again, the same process. I look left here just to validate the range. And for example, you have something. I just look. You don't need to do that, but something that I do. That is just validate there were interaction between supply and demand, and that interaction for me validates the zone. So you don't need to do that if you don't want. Something just is one of my rules that I found that this gives an edge to the entire range. And then I focused on the extreme. If it go earlier, I took M1 confirmation entry. And a lot of buy side liquidity, so I was very happy to take the long with this corrected move. We have all this inducement, and I was just focused on the extreme like I usually do. Sorry, okay, it went a little bit quick. Okay, you can get involved here with let's say if you use M1 with 2 pip stop loss is more than enough, because you try to cover a little bit of structure and you probably get tagging here and it end up as a break even. But yeah, that was a trade for me that I took and end up as a break even. But the idea behind is that M1 entry model, the look left, justify the range is actually an interaction between supply and demand. For me, this was also a flip range. Sorry, a sweep range, because I like this one. For me, also a sweep range. It's one of the rules. We sweep. I try to find something that price sweeps, so it works for me. This is my edge in terms of continuations, and yeah, just take the extreme. This one was a break even. This one was a 10R. And the London session at this point was already finished, and yeah, that was what I was planning to talk about of M1 continuations. I hope it can help you somehow get a little bit from insights how I take continuations, and just be aware that everything that I do, try to learn with an open mind, but also there is nothing wrong about tweaking and making this to a little bit more adjusted to your own style, your own trading. Because I also, when I learn and I start to build case studies, all that stuff, I start to implement my own twists. So I start implementing my own way. And trading is all about that. You need to understand that you don't need to be a copycat from myself, from Matt or David, or everyone in trading. You need to be unique. You need to have an edge, and then you need to use data and case studies and all that stuff to support your decisions. But ultimately, you want to be you want to build your own way of trading that resonates with you. So yeah, hope it helps, and see you guys soon.